Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Scroll through the comments section, going to read some comments, give you my financial opinion, and give you some of my experiences. So got 65% silver, 32% gold, and 3% platinum. Wondering if I should swap some 10% of gold into platinum. Any opinions? That's going to be up to you. Gold does do very well under monetary problems. Gold outperforms silver and probably platinum in monetary problems. So if it's a hyperinflation or something like that, then I would prefer to own gold. That's why I have mine is 10% gold, 60% silver, and the rest 30%-ish or something like that, platinum. So I would choose whatever you think is going to happen in the future. But as long as you have a mix, I think it'll be fine. That's kind of my opinion on it. Question is who you swap your metals with. May you please explain. So I swapped my palladium and gold at a local dealer. I went in with the physical metals. And if you want to know, you guys, a dealer will have to do a 1099 if you're swapping metals. If you transact in quantities greater than 100 ounces of palladium, 1,000 ounces of silver, 25 ounces of platinum, 25 ounces of gold. They are required to do 1099. If you come in with less than that per transaction, then you are going to be responsible for reporting those gains. I just wanted to let you know that from a tax perspective. When you go in and you have your physical metals, at least the way that it worked when I did it, is I brought my physical metals in. They gave me a price. At that time, gold and silver were highly being purchased. They're huge premiums. I got $25 over spot for my gold. When I gave them the gold, I bought platinum at $40 an ounce over spot. I think it was 40, 35 or 40. I negotiated with the dealer. He said, you know what, I'll give you a good price on the platinum. And he gave me a decent price on the gold because not many people were selling their gold at that time. And the way that transaction worked is he took the gold and he was going to sell that gold to people that would buy from the store. I had to purchase my platinum from a different party because he did not have it in the shop. So he went to another party, ordered it through the phone, and I had to come back later to pick it up. So what I did is I got store credit for what I handed in. I also handed and traded in palladium on a different transaction. It was I can't remember which one I did first. I think it was palladium first and then gold I did second. I brought my palladium into the store. They do not do a lot of palladium transactions, so they did not keep the palladium. What he did is he called a third party. At that third party, I was dealing, he was the intermediary, if I said that right. He was calling on the phone, going between the dealer and myself. It's a regional dealer of some sort. They negotiated price. They spoke with me. I said, okay. And then I got a deal on the swap through the dealer because I was working with the dealer where I sold him my palladium and I got platinum from him. So the third party is the one that I worked through for that transaction. So that's how it went down. It was that easy. And I got store credit both times. And then I got the metal some weeks later because I had to wait. They didn't have them. So that's how the transaction worked. It was mainly using store credit. And since it was store credit, you don't have to pay sales tax either, if you want to know. Because it goes into store credit, it sits there, and then they use the store credit for the payment. So that's how that worked. And it was local, and I just brought them in physically. No shipping costs, nothing. Now, you can do that through online dealers. You can trade or swap metals, but I think you're going to have to they're not going to give you as good of a price, and you're going to have to pay for shipping to get it to them. A lot more expensive than it would be to go to a local dealer within 100 or 200 miles of where you live and see if they would do it. Now, if you specifically ask to swap metals, they're probably going to say, no, we don't do that. Nowhere I know just swaps you straight up. You are going to have to pay some premium to do this transaction because that's how they make their money. And the gains here are so ludicrous that I don't know why someone would not do it. A premium would not scare me if it was a small amount. Every transaction that you do with a stock, you have to pay taxes. That's a premium that you have to pay. It's something that you lose or whatnot. So there's ways to do these transactions using store credit and whatnot to get a good deal. And you can negotiate with the dealers if they're willing to negotiate. That's what I did. This guy says, you turned $10,000 into $6 million in 20 years. Sounds like BS. No, that was an example. And in 20 years ago, I was like 19 years old. So I did not know about this type of investing. But I did buy metals right when I found out about it. The way that you figure this out is you use ratios. Everything I use to invest is based off of ratios. I turned $14,000 this past year in 2020. Let me see what it's actually worth now, because it's in 4 different accounts. This is using ratios. It's the same thing. And guys, I don't really care about money. And you shouldn't care about money either and how this works. It doesn't validate the reasoning behind it. So I'm a little confused. But if you want to know, 14,000 divided by an average cost of that times, what is it at, like $34.50 or something? I turned 14,000 into $322,000 in 1 year on one position, if you want to know. And that was using ratios and my technical analysis. And that's just one position. That's across, I think, 4 or 5 different accounts that I own. And then I have got a lot of other stuff. My overall return in my commodity portfolio, the 20% that I'm trying to push, is just under 220% over the past year, using ratios and ratio analysis. Now, some of these guys, Eric Sprott, Rick Rule, Warren Buffett, you're talking about guys who are all in their 70s. Of course, I'm not going to make as much money as these guys. That's kind of obvious, I think. I'm a lot younger than them, but who knows what the future is going to bring me. I also probably don't have as much capital starting out, so it's tough to say what's going to happen. He says, okay, so it's just a hypothetical investment strategy. Not the strategy is not hypothetical. I've been deploying this strategy for a little over 10 years, about 15 years maybe. I bought palladium in the mid-2000s when I found out about it in my mid-20s. I rode it all the way till 2020 is when I did my swap into platinum. I've been buying silver too, 2018, 2019, and then it peaked in 2020. I bought some more there. And I've been using this strategy since 2005, I think, 04, 05, somewhere in that range. So this is something that I have deployed. I am deploying, and I'm actively doing it. I'm using it in every single investment that I have. Every single one. I've used it in oil, uranium. I've used it in all my physical precious metals and everything else. Copper. It does not matter. I'm using it in the whole channel is based off of ratio investing. The whole thing. Now, the thing that you're going to have to work on, so if you know the ratios, which is the valuations, and then you know the market conditions, this is the thesis of the channel. Use the market conditions. That just tells you when the ratios will shift. So, yeah, I've been doing this since I was about mid-20s. I'm 40 years old now, so call it 15 years Got 18 years of investing, 15 years of doing ratios. This is the only thing that I've actually found that works. I've watched some of those guys during this time frame, and I think that this strategy works better than anything that I've found and have read by any person. And that's why I'm sharing it on YouTube with everybody. And guys, if you get mad or if you are calling BS or whatever, like, I mean, I'm literally giving this out for free, and people can view this. So I think it's very generous of me to share this stuff because I know a lot of people, they don't have to. There's no reason that they have to. So I'm just saying, don't be so mad. This stuff makes sense from a logical, rational perspective, and I've been deploying it for 15 years. I've made very good money doing it. So I would listen. That's just what I would do if you guys want to make money. So it says, I called around to some small gold shops, but they don't do swapping. Where do you go to swap these metals? I know. So don't use the word swap. Say, what would you do if I traded in this metal? And do you guys have platinum? If you want to use platinum. If you use the word swap, then they're not going to do it because they're not going to make any money. They're going to have to charge some premium. They're going to have to make some money doing this. They're not going to do it for free. Now, some people say, oh, it charges a premium, I'm not going to do it at all. That's not a good strategy. I mean, I just gave you an example of a palladium to silver swap. And one full swap in 20 years yielded 75 times your money. A small premium is going to stop you from making 75 times your money. I mean, think about that for a second. Now, if I'm going to put dollar value to it, because it seems like everybody likes to think about dollar values. You put $10,000 into it. 75 times your money is $750,000. Now, what if you've got a little bit more money? What if it's 100 grand times 75? 7.5 million. That's not enough for you? Premium's going to stop you from getting that? It's not going to stop me. And the premiums aren't too bad. Sometimes they're super small. I got 25 over for my gold, and I paid a premium to buy the platinum. It was either $10 or $15. I can't remember the exact amount. So what I paid to do that swap was $10 to $15 per ounce. That's fine. And I rounded up, and I paid cash for the rest. That's what I did. Looking at some of this other stuff, I have been stacking as I used to, and I think I'm going to go back to that. But what about factoring in premiums on the buy side as well as the sell? What is pretty typical when doing a swap? So when you buy things, it all depends on what you negotiate with the dealer. I negotiated I think it was a $15 premium to do that swap. That's what it cost me to go from gold to platinum. Palladium to platinum, I think I got spot for palladium, and then I sold and I had to pay the premium. So it might have cost me $40 to do that. 35 or 40. One of those was the premium to do that swap. And I had to buy premiums obviously on the front end side when buying palladium, but usually the premiums are pretty small when you're buying the out of favor metal, because the lower the price, the smaller the premium. If you sell something that's in favor, usually you can negotiate a better price. Gold and silver, you can negotiate better prices because they're far more popular. Problem is, they're not the ones doing all the work. Usually palladium is, and silver and platinum. Well, I would say palladium usually does a lot of the work. Now, if you had chosen rhodium and you went into rhodium, and I was going to buy it when it was a little bit more expensive, not at the total bottom, but it bottomed at $650 an ounce. I just didn't know how to buy it. Not many people sell rhodium. Rhodium went from $650 to $30,000 from 2016 to 2020. So that was a huge move, and all of them metals signaled that rhodium was a screaming buy in 2016. So from 30,000 divided by 650, that was a 46 times increase on just the one metal. So when I did that example and I said 10,000 could turn into like 6 million, maybe it was even 10 million. It was a ridiculous amount. It mainly came from rhodium because rhodium was so volatile and it just took off. It almost, I think it was close to 29,500 or 30,000 is where it peaked. And it's coming back down now. Now I would have already swapped out. But yeah, looking back is 2020. But looking forward, um, yeah, everyone I think knows on the channel who's been on the channel how to use ratios, how I view them, how to look and see it at bottoms, and what I'm buying. Platinum's at a bottom. I've bought the living poop out of it. I'm sure everyone knows that on the channel as well, and I think it's probably bottoming, and it's coming back up. And I've gone over many videos on why I think that. Uh, Definitely look at my old videos if you guys want to see what I did with oil and natural gas and uranium. I've been buying it since the 2020s and since the beginning of this channel. I started this channel August 2020. I have not really changed any of my opinions. Since then, I was buying stuff before it as well. The commodity market bottomed in 2016, and I actually bought, and this is weird, I bought First Majestic Silver. I think it was $2 a share at that bottom in 2016. And maybe I'll pick up or look at my history and see if I can find some of that stuff to show you guys. I wrote it all the way up, and I had sold it at the peak thinking, remember guys, I've developed this over time and I've refined all this stuff quite a bit. So I was a good trader back then. I'm more of an investor holding on to this stuff longer as I progressed through my investing throughout my investing years. So a lot of this stuff I used to do more trading and whatnot, and I've gotten lucky kind of way back in the day when I didn't know as much and it wasn't as refined as I was trying to refine these things. But the physical metals I've always liked. It doesn't allow you to be jittery. Like you have strong hands because you can't just sell this stuff at a heartbeat. So you kind of have to think about it. You have to physically go there and you have to, do your swap or whatever. I have sold metals before as well on Craigslist and other things. You meet at a bank, do the transaction, put the money in the bank. So you can't take, your metals and stuff and steal the money too. So you can do the transaction there if you want. So that's another thing that you can do. Andy, China's economy sucks up 40 to 70% of world commodities. Is that true? I'm not 100% sure if that's true or not. If the Evergrande thing goes totally nutso and China tanks, how badly might the impact commodity valuations? So, from what I would gather, the commodity prices are two things. You're talking about the supply demand, and then there's an inflation aspect, where if you get huge inflation, you're going to get higher interest rates, and higher interest rates are going to rotate money into commodities either way, and precious metals. So I don't know if China's economy, or I don't know if their economy sucks up 40% to 70%. I think perhaps China flows through commodities, but they don't actually consume them themselves. So they may flow through China and come back out to us or other people, a lot of those commodities. And it might be a little weird on how many they actually consume themselves. So I don't know the exact number of what stays in China versus what gets cycled through it. Because you could say that a whole bunch of rare earth metals, 99% come from China. And if China has problems, what would happen? Well, if 80% of those rare earth metals get consumed outside of China, I don't think it's going to really impact rare earth metals. And that same could be said with commodities as a whole. I think that the Evergrande scenario is less to worry about than an actual energy crisis that's ahead of us. I think the energy crisis is a bigger deal. And it started in 2019. It's worked its way through into 2020. And then in 2020, it's gotten bigger in 2021 as it's gone through time. Now it was China in 2019, not China, Asia in 2019. Then Europe had a blip in 2020, just a little blip. And now it's Europe and Asia in 2021. And we're seeing that little blip come to the United States in natural gas prices. We're seeing coal prices go up. We're seeing oil prices go up. And it's spreading everywhere. So what I would be worried about is this winter and next year, how this is going to impact the United States if you live in the United States, and how it's going to impact the entire world, and what that energy costs are going to be, because it's going to spread itself all through, I think, prices, which is going to be very inflationary, and it could impact certain areas quite heavily in terms of fertilizer and these other things, which then impact food production, and you get this tertiary effect where everything just blows all out everywhere. That's what I would be worrying about. I wouldn't necessarily be worrying about Evergrande, but the second largest economy, and their housing, the real estate market there, that is something to worry about. And I don't know what the necessary impacts exactly are going to be. Looking at history and commodities, I've always looked at it from a United States-based aspect. And the mid-2000s, everyone says that China drove it. I'm not 100% sure about that. And I don't know the exact reasonings behind it. I mean, that's what people say, and I know they've built a lot. I agree with that. But I don't know what extent of an impact it was and why China chose and all these other things. I mean, I was reading articles, I'm going to go over in later clips today, about reasonings why, and none of them were right. There's no way that they're right in half these articles. They're just wrong. They drew wrong conclusions, and that's how you get all messed up as an investor when you start reading some of these articles. The author doesn't understand economics, and I would say most people don't, and they draw out wrong conclusions because you can't replicate it in history. They'll say this is why, and it's like, no, it's not. It's not wrong. That's not why. And then once you start really figuring this stuff out, when you really dig down into it, you start seeing patterns. Things, it's like this happens, then this follows. This happens, then this follows, and it repeats. Now, people will say, they'll say correlation's not causation. Like, sure. If every time you hit the C button and the C button comes on the screen, you can make that statement. Correlation's not causation. But me hitting C and it coming up on the board, well, maybe it is. Maybe there is a cause. Maybe the correlation is causation. We may not know, and we may not have to know the exact cause of that correlation. But if it works, and it works repeatedly, that's what I'm interested in. And I'll go over some stuff in history. I grabbed some housing starts all the way from 1890, I think it was, and then inflation rates and all that stuff. And there's some pretty cool correlations. I would say that housing starts as a cause. And others would say correlation is not causation. Well, if every time it happens, and it's got 10, 12, 14 instances in history, I mean, we're getting there pretty close. And if the curves match almost identical, I mean, it's pretty hard to deny that. But we'll see. I mean, we'll take a look at that data. I'll show you what I'm seeing, but I think it's pretty cool data. So I'll stop it there. We're getting a little bit long. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thanks for listening. This is Finding Value.